I believe that the most recent actions are a situation where they are increasing production, and clearly have a demand problem. As a result, they are lowering pricing in the United States. The S and the X at price reductions were quite clever, and now they will be able to take advantage of some federal incentives. The former Ford CEO Mark Fields discussed Tesla's stock decline and the auto sector in general at a recent CNBC Closing Bell Overtime show. There, Fields explained the difficulties that the automotive sector is currently facing, especially with regard to rising prices, declining demand, and the possible consequences of a union strike. Fields conjectured that a decline in demand could be the cause of Tesla's recent price cuts, potentially signaling an affordability dilemma in the new car market. The average consumer now has to earn a startling six-figure income of over $100,000 to comfortably afford a brand new car, according to Fields. I think that's what was reflected in their stock price today. It's obvious that they have a demand issue as you go from kind of early adopters to mass adopters of electric vehicles in the US, and you're seeing their pricing reflect that. Vehicle prices have gradually decreased in the industry as a result, leading to an inventory adjustment to align with the shifting market dynamics. The former CEO of Ford, however, believes that Tesla has a special aptitude for extracting revenue out of rivals. Fields provided commentary on the development and its implications for Tesla and the two established manufacturers. After Tesla reached a deal with Detroit's Big Two General Motors, Corp and Ford Motor, co-allowing their electric cars to utilize its charging infrastructure, I looked at the market as a whole, Morgan, and you're still seeing a lot of pent-up demand. Even though stockpiles are up almost 70% from the previous year, they are still much below their typical levels. At this time of year, due to supply chain problems during the past few years, and for that reason, several automakers are raising their incentives. Greater than, but to your point, I believe that when you look at what's happened with pricing, the average new car loan is over $760, which is up about 30 to 35%. From where it was back in 2020, the same is true for used automobiles. As a result, you are in a position where you need to earn more than $100,000 annually in order to purchase a new car. Fields said in a different CNBC interview that Ford and GM's ** choice to side with their adversary in the EV space was a practical one. The number of new EV products these companies are bringing to the market and the ramping up of their production is outpacing the charging infrastructure build-out, he stated. Greater than Fields stated that the ** current combined charging system is not very dependable and that what Ford and GM get out of this is not just an increased number of chargers but the dependability of them. He believes that the customer experience is the main focus of the collaboration. Additionally, Fields shared insights into concerns on whether Elon Musk, the CEO of Tesla, had struck a bargain with the devil by successfully promoting rivals' goods. ** greater than Fields stated plainly, Tesla has a unique knack of getting revenue out of their competitors. He mentioned that Tesla was selling EV tax credits to other automakers that weren't fulfilling ** their energy efficiency standards. He stated that the corporation run by Musk is currently following suit with its charging division. He stated that's important for the automakers because, yes, they're giving their competitors some money, but at the same time, they're thinking about how they're going to, turbocharge their own sales and also about repeat sales. The next time the customer buys an EV and comes back into the marketplace, Fields responded that the EV pioneer has to strike the appropriate balance. When asked about possible dissatisfaction among Tesla users who may not appreciate the loss of uniqueness and dilution of experiences. To truly create those kinds of special clubs, Tesla can come up with some creative things, like having charging stations at its locations just for Tesla cars. The veteran of the auto business stated additionally, he reported that ** only 12,000 of the locations shared charging infrastructure. He continued by saying that Tesla could have more because it has been rapid in creating charging infrastructure. Fields pointed out that Tesla also has data on where the prime spots are, and that it ** can utilize that to select which charging areas can be made available to non-Tesla owners. According to him, Tesla has been constructing the charging infrastructure for more than 10 years, and the service has excellent customer satisfaction. Fields shared his thoughts regarding the current talks between the United Auto Workers (UAW) and major manufacturers. The upcoming union contract is a crucial turning point for industry giants, as he emphasized that labor costs account about 10% of the overall vehicle expenses. Notably, the UAW has called for a significant wage increase of 40% throughout the course of the contract, which intensifies the significance of the negotiations. The future of automobile manufacturing is at stake as the industry readies itself for these significant advancements. Given this, an expert stated that Tesla might be a major beneficiary in the event of UAW strikes. For background, as the deadline approaches. The United Auto Workers strike against the big three automakers. Ford, General Motors, and Stellantis remains a threat. As a result, David Madland, Senior Fellow at the Center for American Progress and Senior Advisor to the American Worker Project, and Nathan Bomey, Axios business correspondent and co-author of the Axios Closer newsletter, joined Yahoo Finance. Live to talk about the possible strike and its effects on the car industry. It is possible that all three may strike simultaneously, according to Bomey, and if that were to occur, the auto sector would experience a severe bottleneck. Additionally, he added that if there is a major strike, Tesla would win. Since Tesla is obviously not unionized, he added, the company would also be the winner if the automakers had to agree to huge pay increases. According to Ford's former CEO, Mark Fields, Tesla is still the benchmark for the electric car market, and smaller players are at risk of failing or being gobbled up by larger peers. In a recent episode of CNBC Squawk Box, former Ford CEO Mark Fields stated that some of the smaller firms like Lucid run the risk of being bought over by bigger companies. Greater than I think every automaker still benchmarks Tesla as the leader at this point among the growing pack of EV makers. Fields stated he cited Lucid and Nikola Group's revenue misses as concerning indicators. Additionally, those companies have been plagued by persistent supply chain bottlenecks that have slowed production. The competition from big incumbent rivals like Mercedes and BMW is fierce, and it will only get harder for companies like Lucid and others that are pricing vehicles in the high-end price range. Greater than, there is no doubt that these companies will require capital to expand their operations, Fields stated. Greater than some will have to be purchased by some of the bigger players, while others will succeed. As for Tesla, Fields emphasized the firm's capacity to manage vertical integration throughout the production of its vehicles. Which has permitted the company to be the master of their own destiny of the costs. They continue to receive a premium when you combine that with their brand, which is highly respected. They were a pioneer, Fields stated. Fields gave his thoughts following Tesla's Investor Day earlier this year. Greater than Fields stated, at the moment, Tesla is one generation ahead of the other automakers. I believe Tesla further proved that they still have an advantage over competitors, even though rivals like Ford and Hyundai are making significant strides. As the market continues to grow, Fields predicted that the EV business will eventually have no single leader. When you look at the adoption of EVs over time, this is a huge addressable market, he remarked, suggesting that there will be both winners and losers. However, Tesla continues to lead the EV market. Why? Well, just because Tesla's manufacturing methods have allowed them to outpace the larger rivals in the EV car market. It was a struggle for mass production, but not easy at first. As they began to figure out how to construct their cars at scale, Tesla had to confront some manufacturing hell. As an automaker, Tesla's approach looked counterintuitive. To increase demand, they focused on quality and performance rather than mass-producing automobiles for affordability. Additionally, Tesla's focus on research and development is keeping Tesla ahead of the curve. The fact that some of the best scientists and engineers in the world work at Tesla is already well-known. In 2025 alone, Tesla contributed over $1.5 billion to research and development, spends more on R&D than any other automaker, according to a report. In R&D, that amounts to $2,984 per vehicle.